Welcome to our GBP USD trade analysis for last week. This is how the market is right now, GBP USD. So it's kind of in a ranging place. If you take this, if you take the market from around this area, you get it's kind of in a ranging. So I'll take this all as a rectangle. The market can break out to either side. You get. So I wouldn't be convinced with the daily time frame. I would say it's an uptrend. Reason being the market hasn't broken below this low. It's just in between the. So it will continue with its uptrend if it breaks this level, and I would be looking to short from around this zone. That's on the day. So let's drop down to the 4-hour time frame and we see how. Now, hey guys, I'll show you the strategy that can help us determine the trend of the week using the Asian break. That's the high and lows of the week. That's why it says dotted lines. I shared it with, I think, Ernest. At the market, the 4-hour candle that breaks out determines the trend of the week. Then we just look for moves in that. So this week was bullish. It had so many bullish moves, though we had some sells in there. Let's go to the 1-hour time frame. Now, I use the 4-hour time frame for the main trend, 1-hour time frame for the current trend, and the 15-minute for entries. Only the 15-minute for entries. I don't scale down to the 5-minute or the 1-minute sample enter in seconds. I don't do that. I enter the 15-minute time frame. So it's where I look for main confirmations for me to enter a trade. Now you see why I told you guys a trading plan is important. It's like a set of rules. Ever since I wrote my trading plan, it's what I've been following. It's a rule like do this, do this. If you don't do this, the market is going to do this to you. You get it's like follow your rules. Once you learn how to follow rules in Forex, it becomes very easy. You create a strategy. Now you can create a strategy that's even better than for any mentor you've had. Only that you won't be having confidence to trade it, but once you develop that confidence. Now, remember, when I was telling you guys about trend lines, I know most of the people on this call are on trend lines because the other guys who have finished mentorship with me, I don't call it mentorship, but who have had sessions with me and finished like Jimmy, that one is profitable now because he trades his own accounts and sometimes he just comes to group to cause commotion, but he's a very good trader. And there's a King, I think it's Young King, I call him King. He's also too good and he only uses trend lines. He only uses trend lines and support and resistances. He doesn't add anything like order blocks, nothing, but you can advance your strategy. You see strategies we see in the internet. Like I'm from posting a post in group where I told you guys develop a strategy. You only need the foundation and some strong pillars. Then you can alter anyone's strategy and make it yours to fit your perfection. Don't follow different people's risk management strategies. No. Develop yours that works with your mindset and that works with your psychology. You get develop yours that understands you. That's how you find consistency. Consistency is the ability to repeat something over and over again. You get once you see a pattern like the M and W pattern, as long as you're willing to repeat it over and over. Now, you guys, last week I was telling you about a trend line, though we're going to look at it. Let's give an example. The trend line break, like this is a trend line break. I told you guys the 15-minute break is always a fake out. You get that's the reason why we had this trade on Friday. It was a very easy trade. I saw a break and a retest. I'm going to show you the entry confirmations, then a drop. But once it reached this zone, now you guys, you know how the market moves forming higher highs, higher lows. Now it had broken over a resistance level, and this was a retest. That's why I bought from here up to up. The market hit take profit and turned immediately to continue, and it formed an M pattern. You get so if it wasn't Friday, I would be selling this market exactly from this point to this point. You get I always mark out my zones. Now you see this would be my first TP. My second TP would be here. Actually, I didn't. There is an order block around here. If you use our indicator, you get so here can be action. There can be action, but there is no other confluence. Maybe if I draw a trend line, of course there is no trend line. I'm not saying any. But if I draw a trend line and it confirms that here there's an order block, a trend line, and a W pattern. I take 3 out of 4 reasons why. Why? You're supposed to show accountability. In Forex, accountability will get you far. Give reasons why you did this. Give reasons why you entered the setup. You get. Now, this will help you in future because some people I know haven't started trading yet. You get. Haven't. Maybe you are still in a demo, but as long as you're willing to learn a lot, Forex becomes very easy. It becomes very easy. You get. So let's go to the 15-minute and determine reasons why we had entries. Then we shall go down to looking at trend lines in depth. Then we shall apply trend lines and support and resistance. Then we shall see them with Fibonacci because we have someone right now who is on a Fibonacci level. Yeah. So let's start from where the week began. The week began with a range. This was Monday. The reasons why I don't trade on Monday is this funny stuff. Friday ends with a consolidation and Monday just continues play because there are no major movements in the market. Now, the reason why it trends in the Asian range is there's no volatility. You get, I told you guys when you're buying the market, on the other hand, there's a seller. There is a seller always. Even though you go to the market and you want to buy anything, there's someone who is supposed to be willing to sell to you. Just because we don't see this. Reason being, brokers just give us CFDs. I always talk about CFDs, contracts for differences. They be like, if you're right, I'll pay you. If you're wrong, you pay me. That's why people say it's betting. It gets because they provide us with CFDs. Shall see that with time. I already share. So Monday is this. Monday is this problem with Monday. It's just playing around there. So now in this video, I've removed trend lines because I just have to trade during the week. And if I leave everything, you guys won't be able to see anything. You get. So the market was in an uptrend. You're seeing this. We have seen this from the 4-hour time frame, 1-hour time frame, and the 15-minute time frame. So the 15-minute time frame is showing us an uptrend. Reason being, Monday is here, gives us an aim. Now this would be another entry for quick scalping. This one. Reason being, this it was moving up, formed an aim, came back to retest, and we're seeing it's failing to break this psychological level. You get. Now remember when I told you about candlesticks like ADI, sometimes you don't need to wait for an engulfing. That's when we shall look at the proper risk management strategy that I will show you guys. You get. The market reached here, created that week, closed back in. Now sometimes we need to see a candlestick closure. You may get a fake out and it doesn't close there. You think, my zone has been broken. Yet the bigger time frame candle has not closed. Then immediately you say it have been taken out. My resistance has been broken. The market melts on a higher time frame, closes lower. Then it's engulfed, then moves down. Now this is still an uptrend. Reason being, we have this, I remember it's trend line. That's a trend line here. Let's leave that one there. So this would have been a sell, you get, up to this level, but this wouldn't be a nice sell. It's a Monday, small market movements, 50 pips. It's crazy. I don't trade on Monday. So now you see uptrend. I would mark out this zone. Of course, there's an order block here. I think from this candle. That's why our indicator just gives us nice order blocks. You get. So what would I be waiting for? I knew this zone had to be broken. We're in an uptrend. You get. This is where trading with the trend comes in. So this would be my first touch, second touch. I take the weeks. So sometimes you may be so many weeks, so you just take something like this. You take it as a zone, you get. But you consider this down now and you just take it as a door. You just see market behavior in that area. So what would I be waiting for? A third touch. But since I'm in an uptrend, I would be waiting for a W pattern to confirm that we are still going up. Now, when the market melts on a Monday up to here, and I see a week from this low of the week closing back in, I would be like, oh, we're waiting for a W pattern. This zone hasn't been broken. So once it goes up, comes back to this trend line, I would buy after it's engulfing here. Like after the candle has closed, you get someone asked for entries. This candle would close in. I would start buying from here. But my stop loss would be below here structure. Let's see how many pips that would be. This is Monday. So 28 pips, I would close, I would extend it around there to give me 20 pips. You get, because this is a big area. So if sometimes I would enter small lot size to test the market, because this is a resistance zone, it's very strong. So I would enter, if my total lot is 0.05, let's take a smaller count. I would enter 0.01 here. If it goes in profit and breaks this zone, I would enter another one. You get, but let's look. Immediately it breaks this resistance and confirms that the candle, let's remove this. Let's remove this. And it confirms that the candle has closed above. Yes. I would wait for that retest and I would buy from, let's remove this too. I would buy from this zone here because I'm not sure that the market can melt down again up to here. No. I would wait for these neutral candles. You see, this is a pattern. These are neutral candles in there. I would add more positions because I'm not seeing sellers coming in. No, this candle hasn't been engulfed. This candle here hasn't been engulfed to the downside. You get. So I would wait. I would see this candle. I'll be like, these are neutral candles. Market maker. I would add positions here because right now I'm in profit after here, and my zone has been broken. So I would take this as a retest. Now, if you go lower, I think using let's try seeing the line chart. I see the line chart. It's giving a W pattern there. You get, so it'd be looking for confirmations on only this point here, only this point. Okay, sometimes line charts help a lot. They can determine there the market may change. I see W's, M's, W. It's just beautiful. This is a W pattern here. They form M's and W's, though I just use them as confirmations. So now I buy up to this level. Now there's an order block here. Let me zoom that out. There's a simple order block here. I think here. Sometimes this indicator shows you what you're not. Right now, it can't appear because the market has moved on, but consider so many things. So Monday, I don't trade, but this was a buy I called out, I think. Yeah. Called it out, first went in losses, but it pushed up because it bounced on this trend line. So why would I call it a false? Now, why would I say it's invalid? If I say a solid break, retest, then again, continuation. I would say my zone is broken. That's why this trend line was still valid, it was still pushing. And this is a psychological level. Sometimes we have an extension. Now, if you go to a bigger time frame, you may find this is just a week. Let me say 1, 2, 3. Yeah, this is just a week. If you add, if you go to 1 hour time frame, 1 hour is made of 4 15-minute time frame candles. So this is just a week closes, which has closed like here. Get. Yeah, so that's how we trade. So let's continue. The market moved bullish. This trend line was still valid. So you extend the trend line. Okay. Just extend the trend line always. Let me zoom out this. So what happens? The market comes back. I would buy from here. I would buy from here. I would get another confluence like this. Let me say this confluence to buy from here would have been uptrend, break. This would be a resistance, break, then a retest on a resistance level and the formation of a W pattern on that retest. So it'll actually buy from here. So the market comes back here because this is like the 61.8. I don't know if you guys get me. So break. That's why I tell you guys, basics are it. So it's like a break of structure, retest of that structure, then a W pattern formation. So the market pulls back in here because our stop losses are still down here. Market pulls back to what we'd say fib level. Then it continues to buy. It would be a very nice trade. Very nice trade. So trading is practice. The more you practice, the more you get this stuff. It becomes easy with time. Since you have seen everything, and boom, you know. Now, what happens here? There's a trend line running from up there that I removed. There's the reason I saw this pair. Now, it formed a W, a big one. You get. So my confirmation was a sniper entry because there's an order block here. I told you that indicator just puts order blocks immediately. You get. So M pattern here, sniper here. Take profit of this psychological level. Reason being, I'm afraid that there's a trend line and there's a psychological level. Once I see those two things, I avoid that direction. Just avoid. So a person who was opposite, Jimmy that day, Jamie was buying the market. Reason being, he was still on the uptrend. Now me, I was selling. The guy's like, why is selling? Why is selling, man? I'm buying. He was on the right side. Reason being, there's a trend line. There's this psychological level, this one. And there's some W pattern going to the upside. So he was started buying when he saw his wicks. And when he told me, I've seen wicks, I'm buying the market, you can sell. I jumped out from here. You get when I saw his wicks and I sent it out, guys, there are wicks, get out. But guys in group don't listen. So this trend line continued up here. So what happened? Why did I sell the market from here? I was looking for only 20 pips. I was looking for only 20 pips. Reason being, market broke in. So I thought it would buy from here, but it broke our trend line and retested it. And there's a small M pattern there. I saw the market and I was taken out. I was taken profit from here. So I didn't take all my profit well because I actually thought it would come and hit this psychological level. But I ignored these weeks. I ignored these weeks here like this. I ignored the weeks and I stopped out in profit. So the market went, it broke back in. Now Ernest came and asked me, why did you sell from here? Now, why did I sell from here? There was a psychological level. Very strong point here. I take them as support and resistance. And why that psychological level? There's an M pattern, a very strong M pattern. And what other reason? Why did you sell? There is this was a strong resistance point. Now there's also an order block which I don't want to bring out. So sometimes we have extensions. That's why we put our stop loss above around here. So that in case it breaks back here, like it's done. But what happened? Me, this trend line was broken back in. I knew action is coming. So when I saw this W pattern, and I expected that pattern to happen from lower, but it happened higher. I sniped it from up here because I didn't expect it to break. Let me delete this to break this zone. So I entered small lot sizes to test the market. You know, this market can reverse and continue. Small lots. And when I saw that huge candle, I added positions, big ones here. Kept on adding so many positions. I just kept on adding from smaller to bigger. Now the small positions here were more than these lower ones. You get, because the market was it was a momentum push. So my take profit, this time I didn't ignore the wicks. I took it in, hit take profit, jumped out of the market. Started bouncing Asian range. So I drew another trend line here. So where would I add more positions in this market? After seeing these wicks, I would wait for it. Now, you know the formation of an M pattern where it's fast peak, trough, peak, trough. The peak is not it's not always perfect. This is a perfect one, but those M patterns are not perfect. So where would be my other entry to add more positions when it comes back to retest the broken zone to continue to the downtrend. So this would be my entry here. Add more positions. That's why you see here, this would be a very nice place. Now, guys who use limits, what I've just set them down, the tight stop loss. So they will go back and hit take profit. So now here, this is a trade I mistook. I think there's a trend line running from up. And I thought it would sell, but it didn't. And it didn't give me confirmation to sell because this was at 38.2, so I didn't sell the market. So I drew a trend line. Boom. No, I didn't draw a trend line first, but I waited for the market to buy. Since he had failed to sell, so I was looking for another sell. I marked out this area as my highest. And immediately the market came back in here. I think on the 1 hour shows a bigger picture. I sold back because I knew that to buy, reason being, that's a structure that was broken down here. That's a structure that was broken down here. So it had to come back and retest. And this is like, I think, there's an order block and it's like, they call it supply demand. So that's the reason I would have bought here back to up there. But I didn't. I wanted to sell again from around this area. And the market didn't. You get, it didn't, reason being. Now let me give you guys a way to trade resistance and support and trend lines. A third touch is the best. Third touch is the best, but the more it touches, the more it loses its strength to hold that zone. You get. So over, if you say fourth touch, you may take it, but the fifth touch will always break. Sometimes the fourth touch will break. Now this was the fourth touch, just broke through, you tested, and this would be a good buy. This would be a good buy. So let's finish with this one. Then we hold another session where we're going to look at trend lines, and you guys will ask all your questions. So the market moved, came back. Now this is an order block. It just touched. This is our indicator gave us this order block. Let me zoom out. Ah, shit. We get temporary. This is an order block here given to us by our indicator. We didn't want to scroll to the left too much. We just found it there. Indicator gave it to us. So you see that wick, 1 hour wick, just closed back in, I think below the psychological level. Yeah, kinda, almost. So it formed the first M, which we missed because of the Asian session. So I expected a break. Not the touch. This was the third touch. Didn't go too far. When I saw the break, now the trick is the 15-minute break is a fake out. The 1 hour break is the best. Now immediately it came back. I call the signal that is wait for it to come back here. Reason being, it's going to give us an M pattern. It's going to be at a psychological level, and it will be a break and a retest. You get? It will be a break and let me remove this. It will be a break and a retest. So I just called out. I waited for the retest and we sold. Now the reason why I take profit was here was this is a resistance turn into support. So the market had to buy back to this zone. So it formed a W. I bought this market after getting confirmation of an engulfing. Market touched, boom, then sold. This was Friday, sold back down there. So that's how we easily trade. With time, you'll get to know. You just coordinate all this. You coordinate the basics with some advanced thing, but I'll show you guys how you can only use psychological level trend lines, break of structure, and psychology to trade this market. Trust me, it's very easy. It's very easy. You don't need to master 40 concepts. You just need to know the basics, the rules of a break and retest. Break and retest are resistance and support, how to trade the aggressive break and conservative break and retest of these tools. Yeah, so this was the trade I took. Now Monday, what do I be looking for? Monday is for determining the trend. I be chilling. Sometimes I look at the markets, but it's just for chilling Monday. So we expect the market may break through this level. That's what we expect, but market may break through this just to pull back to this level, maybe to continue the downtrend. But I'll just do a trend line and wait and see the action. Asian session may play around. Monday may play around. If it comes back to this zone, and gives us like a W and there maybe an order block, and there is also this resistance turning to this support turning into resistance shall sell the market more. But to me, I think it has reached some point. Let's pull up a Fibonacci. Let's pull back to the 61.8, to the 78.6. Wow. See, this is another confluence, but we wouldn't buy blindly. So Monday will just be chilling. Tuesday we'll see what this market is giving us. Let me pull another fib in case we have to continue selling. Let's see. So it can come up to this down level where this blue line is. We already marked it out. I think there's an order block down there. This blue line. So let's end this live, and we have another live where I'm going to be breaking for you guys how we trade trend lines. We're on trend lines right now, and also fibs and all that. Though people haven't watched the fibs video. So I'll just show you guys how we trade all this and entries. Shall I look at entries too? So let me end this. I'll send you guys a link in a few.